Let me ask you a question. What if the money you worked so hard to save couldn't just be diluted, you know, silently eaten away by some central authority printing more of it? It's a huge question about what money really is, and it gets us right to the heart of what we're talking about today.
So, to really dig into that, we're going to lean on the big ideas from Saifedean Ammous's really influential book, The Bitcoin Standard. And it makes this incredibly bold claim that Bitcoin isn't just some tech stock or a passing fad. It's actually the next step in this thousands of years long search for what we call sound money. All right, so here's our game plan. We'll start with what sound money even means. Then we'll look at humanity's best shot at it so far, gold. After that, we'll see how Bitcoin aims to be its digital successor. We'll get into what it's actually used for, and then wrap up with a fair look at both its strengths and its weaknesses.
Okay, first things first. Before we can even begin to talk about Bitcoin, we have to get a handle on the problem it's supposed to solve. So what actually makes for good money? Now, here's a way to think about this that you might not have heard before. At its very core, money isn't just paper or coins. It's a technology. And its job is pretty simple, to move economic value across space so we can trade with people anywhere, and, this is the really crucial part, across time so we can save up for the future.
And right there, that's the core issue with the money we use today. When a government or a central bank can just decide to print more of it, the value of every single dollar or pound or euro you have goes down. That's inflation. And if your goal is to save, well, that's a pretty serious bug in the system. It makes moving your hard-earned value across time really, really difficult.
For thousands of years, people actually had a pretty good solution to this problem: gold. Gold became the standard not because some king said so, but because it just naturally had the right properties. It was really resistant to this kind of value-leaking debasement. So what was gold's secret sauce? Well, it comes down to this super important idea called the stock-to-flow ratio. Just think of it like this. The stock is all the gold we've ever pulled out of the ground in all of human history. It's this massive existing pile. The flow is the tiny little bit of new gold we can manage to mine each year. Because that flow is so tiny compared to the giant stock, it's almost impossible for anyone to just suddenly ramp up production and devalue everybody else's gold. It's what makes it hard money. And wow, this chart right here just shows you that principle in action crystal clear. On the right, you see how fast the supply of currencies like the pound and the dollar are projected to grow. They're inflating pretty quickly. Gold is way, way lower, but then look all the way over on the left. That's Bitcoin, with the lowest, most predictable supply increase of them all. This is basically a picture of what hardness looks like. But, gold wasn't perfect. It had a huge Achilles heel. It's physical. You can't exactly attach a gold bar to an email to pay for something, and walking around with it is, well, it's not ideal. This physical limitation turned out to be a fatal flaw. So what did we do? We came up with a workaround. We started putting our gold in bank vaults and just trading the paper receipts instead. Super convenient, right? But it created this massive vulnerability. Suddenly, all the world's gold was piled up in just a handful of places. And that gave governments the perfect opportunity to step in, seize control of the vaults, and eventually break the promise that the paper was backed by gold. And just like that, we're right back to the original problem of endlessly printing money. It's that exact historical failure that sets the stage for what comes next, a totally new invention, something engineered from scratch to fix that exact problem of centralization. So the core idea behind Bitcoin was brilliant. It was to take the single best property of gold, that hardness, that scarcity, and build it into a digital form that no one could centralize or confiscate. Instead of having one central vault, the network itself is the vault, run by thousands of computers all around the globe. And here's where Bitcoin does something that nothing, and I mean nothing, has ever done before. It achieves absolute scarcity. See, if the price of gold were to go to the moon, we'd pour more money into mining, and the new supply, the flow, would go up a little bit. With Bitcoin, the supply is hard-coded. It's fixed at 21 million, period. It doesn't matter if the price is $1 or $1 million, you can't make any more. It's the first time we've ever had an asset like that. This little table just lays it out perfectly. Gold is scarce, sure, but Bitcoin is absolutely scarce. Gold is heavy and a pain to move. Bitcoin is just information, totally weightless. Verifying if gold is real takes an expert. Verifying Bitcoin happens automatically, for free. But here's the kicker, the most important one. Gold ended up in central vaults, where it could be seized. When you hold your own Bitcoin keys, you have total control, total sovereignty over your wealth. No one can take it from you. Okay, so that's all the big picture theory.
But what about in the real world? What problems is this thing actually good for solving today?
Amos really boils it down to three main use cases. First, it's a store of value. You can think of it like digital gold, a place to park your savings to protect it from inflation. Second, it's about individual sovereignty. It lets you be your own bank. And third, and this one is so important to get, it acts as a final settlement layer. Okay, so don't think of it like buying a coffee. Think bigger. Think about the deep plumbing of the financial system, those massive, infrequent wire transfers that banks use to settle huge accounts with each other. Bitcoin is like a neutral, global network for that level of transaction.
But of course, there's no such thing as a perfect technology. To really understand Bitcoin, you have to look honestly at the trade-offs it makes.
So its strengths really come right out of its core design. You've got that absolute scarcity we've been talking about. You've got total sovereignty. No one can freeze your account. It's censorship resistant, meaning you can send money to anyone without needing permission. And maybe most importantly, it has a monetary policy that's set in stone, written in the code for everyone to see, not decided behind closed doors.
But you don't get those strengths for free. There are some major weaknesses. The price is famously volatile, which is why pricing your groceries in Bitcoin is just not practical right now. The network itself is built to be slow and can't handle a lot of transactions. That's a feature for security, but a limitation for scale. And finally, the big one you always hear about, the proof of work system that keeps the network secure uses a ton of energy, and that's a huge point of debate.
So in the end, the author leaves us with this powerful image. The argument isn't that Bitcoin is going to replace every currency for every use case tomorrow. Instead, think of it as a monetary lifeboat. It's an option for people living in countries where their currency is collapsing, or really for anyone who wants an escape hatch, a way to save in something that no single government can control or devalue.
And that really is the billion-dollar question, isn't it? Is this whole thing just a fascinating technological experiment, a niche asset for a handful of tech enthusiasts, or are we actually watching the next chapter in the long story of money unfold? A story that started with seashells and led to gold, and now might be leading here? I guess only time's gonna tell.